Joining me now is Matt Brown, CEO and founder of CAIS, an alt investment platform for financial advisors. It's good to see you, Matt.
Great to be here, Sarah. Thanks for having me.
So this would certainly help your business, right? If 20% of the allocation was for alternative investments. How does it work, what you do, connecting the financial advisors to the alt funds of a Carlyle or a Blackstone?
Yeah, that's exactly right. So our mission when we set out was to create a technology company that connects financial advisors, primarily independent financial advisors, so RIAs and IBDs, with a broad menu of alternative investment funds, such as private equity, private credit, hedge fund strategies, real estate, et cetera. And the problem that we were solving was that there was a very unlevel playing field. The biggest institutions in the world have been investing in private equity and alternatives for decades, allocation percentages up to 30 to 50%, while advisors really had 1, 2, 3%, primarily because there just wasn't an efficient way for them to access and incorporate those alts in a portfolio. And that's what we solved.
So how have the funds been doing lately? I mean, the public market got killed last year. NASDAQ was down 30%. A lot of people sought refuge in private and alternatives like private equity. How's the performance been?
So as a platform, we're neutral, but we can observe, which is great. So we've seen a tremendous amount of volume in what we're calling a very uncertain time. We have political uncertainty, we have economic uncertainty, interest rates, inflation, et cetera. So advisors at a pace that we've never seen it are now moving into alternative investments because they see that alts, when added to a portfolio, can not only reduce some of this volatility, but also put them in a position to capitalize on opportunities that the public market wouldn't offer them. So strategies like private equity and private credit have been really in demand. And then on the more liquid side, macro hedge funds also in demand, those that can navigate the global market. So it's very interesting, our position to be an observer of trend and flow and watching what the advisors are doing.
What do you say to the critics, like Cliff Asness, for instance, who wonders about the private equity model because it doesn't get marked to market? That they get these exorbitant fees because they're shielding people from the public markets when, in fact, they're not reflecting the true valuation.
I think due diligence on funds and their valuation policy is critical. One of the things that we noticed in the financial advisor community is that they lacked a lot of the resources to do deep dive due diligence. And as a result, we partnered with Mercer, who does a very thorough investment and operational due diligence review of all funds, which of course includes their mark-to-market policy. So we've seen many funds, of course, look at their marks on a quarterly basis and make adjustments. So we feel very comfortable that the industry is really institutionalized and is quite transparent on that topic.
So how have the flows looked so far, Matt, this year when things are feeling a lot different? Stocks are working, 60-40 is working, right? Bonds are working. You're getting a higher yield. Has that been a competitive headwind for what you're doing?
Yeah, just the stats that we can observe. We have over 100% growth in the advisors that are now using the platform year over year, and also increasing in the early months of this year. Volumes, meaning the amount of capital that they're putting across the platform into alts, is again up high double digits, very broadly across many different funds and strategies. We don't see any slowdown in the allocation of alts. I think we have to remember that wealth management, north of $40 trillion in assets, has very low allocation rates. So even going from 1% to 2% to 5% or 10% means that trillions of dollars are going to come out of the traditional fixed income equity portfolios into alts. So there's just a lot of room to grow.
So there's a lot that is in the word alts, right? PE, hedge fund, all sorts of products that you offer. What's the hottest right now?
Well, we as I said, we can observe a lot of trends, but we're definitely seeing a large amount of flows going towards private equity and private credit. Those tend to be areas that not only have the right strategies, but a lot of the firms that offer those strategies, a few you mentioned, others like Apollo and others, have actually been very thoughtful about creating fund structures that enable wealth management to be able to invest easily in these strategies and then, of course, scale that across their end client book. This is what we're talking about. It's not about the asset manager or the financial advisor. This is about giving better outcomes to the end client with a more balanced and diversified portfolio.